Okay, morning guys. G'day Bobby. Hope we're doing well. A little bit I just want to quickly get through today, so I'll rip straight into it. Everyone can hear me loud and clear. I think I'm coming through. Give me a thumbs up, Bobby. Or g'day Jason, Nathan. All right, so we'll get started. Welcome to TradeSetup in the morning playbook. Now we've had a couple of things. Looks like whether or not the market gets ramped up again today, but definitely you're reading through the news yesterday. I was just reading through it this morning on Reuters and talking about the numbers. You know, US is positive because of this, this, and this, but they were ramped up well and truly. Hey, Chris, the market was ramped up well and truly before the market. Well, basically about this time when the US opened, US gapped up slightly and then it didn't look back, didn't close the gap. It just ran up. So you can see on the CFD, the open yesterday, it was just up all the way. And once China come online at about 11:15, they basically took off. You can see here they gapped up also, and then just rallied all day, and they didn't look back at all. So it's a bit of euphoria over in China on the Hang Seng in the buying, and we're just wondering what I'm watching for today to see if they can continue that sentiment going. I mean, sooner or later someone's going to have to take profits. But in saying that, it is a very strong market, and it's strong out of hours. This Dow is getting ramped out of hours, no doubt about it to me. It's just how do we trade it? There was probably some good opportunity in here. If you could jump in, there's not my ideal setup, but it was strong. Once Hang Seng kicked off, then it was all one way traffic on the Dow and the Hang Seng. It'd be interesting to see anyone looking at the SPY. The SPY was capped at 60.18. It was held down. You could see through the session. So this was the close of the day session. It popped up, touched it. Kept rejecting off that low. Off that level. We held this high low here. So especially the fact that we can see the Dow's just punched up through this resistance in the last 20 minutes or so at 26,320. It's just through this level. A minute could easily back off. And if we do back off and we start to retest it from underneath and hold, then there could be a bit of a squeeze. There's a lot of longs that are built up to get squeezed out of the action if that's the case. But I do expect this SPY to open up and basically trade straight through 60.18. It does it a lot. If it doesn't do much overnight when the US is rallying, it will set up for the day's action when just to sort of no one wants the ASX to get out of hand on the open, to gap up on the open and just drift lower all session. So they kind of like it to not buying the futures up too much unless they're hedging. So to me, it's more like if the SPY futures rally overnight quite hard, along with the US, then they're going to look to hedge it, and they're probably going to have a selling day the next day. But at the moment, it's looking like it's going to pop up. I would expect a bit of a flush lower just to clean out some of these longs, and then ramp up into 60.40. I mean, it just might gap straight up into 60.40 on the open, which is in about 5 minutes. So I'll keep an eye on that. Just want to go over. There's a setup from yesterday. So this was the action when we spoke yesterday. Here we go. We were talking in the stream yesterday that was going to rally, and it did rally after that open. So the market was choppy on the open. We started holding this level through here, which is great. Was bought up here, but I wasn't convinced of that action at all. When I was watching it while I was talking, and it wasn't convincing. We did just push through the highs. So this is into a key level. At that time, it was a level at around 60.40, say. All right, you can see that pop up. It was grinding up. It took out the high, and that's not convincing. So if you don't, in my eyes, we don't sort of pop up and we don't pull back, then and don't ram through that high convincingly, then it's not going to be strong. And you can see it had this minor pullback. So again, it sort of popped up through the highs. Nothing really too convincing. And then we had that. And once we got through the highs on this candle, you can see it come off quite quickly. The next 5 minute candle was down. Okay. So, and what it did, a few subsequent candles, it did push through the highs. Now, that was the whole time when the Dow and the Hang Seng were rallying quite hard. The Dow was open at, the Hang Seng opened at 11:15, so it'd been going for an hour or two. Now, the SPY was just struggling. You can see it was struggling to get too much higher. So if you're a SPY trader, you got to take note of that. And it was around a level because we've got our markets open. It's just that sentiment is starting to run out of steam. Like buyers are running out of steam. Now, if you could see, I was just looking at that level. So you just take it through the lows. There was an aggressive entry in here. That was the first sort of real lower high. that played out, and not so much this. I wouldn't count that as a lower high at all. It was indecision, spike, and drop. This is more drop, a bit of a rally, then indecision, and then you've got a candle started to move down. Sorry, so there was a potential short in here, but it was an aggressive entry. But then with those aggressive entries comes lower risk on your trade. Once you're looking for more confirmation down here, and the second candle would have probably been through that low. You can see that the market's open, spiked, straight back up and straight back down. So taken through that candle with a stop just above, or can have a bit of a wider stop. So there's a bit more confirmation there on that secondary entry. Once you got 1, 2, 3, 4 candles started to play out, or even by the time you got this break of this third candle low, you could have gone short there. But either way, it was starting to break that uptrend. It was starting to see some weakness come in. After that, that should have been strong. If that market was going to go, it should have gone. That's what it's going to be in your back ahead. If it was strong, we're going to follow the US, we're going to follow the Hang Seng. It should just do it. There should be no questions asked. But instead, you got sellers started to come in, and you've got enough fuel on the long side built up to turn around and squeeze them back out, which is what happened. Pretty much dropped straight down after that, come down and tested those lows, and then kept going through in hindsight. So that was a good little short. It was just sort of explained through that one. Didn't get to alert it through the alert service, but yeah, we were talking at that stage, but it was worth just chatting about to see how it's going. Now, if we look at we go over to see what the mini was doing, you can see that was the ramp up that I was talking about into the European Open. And basically it didn't do too much. In hindsight, it didn't do too much through that session. And if you go and look at the Dow index, it did push up in the open, and then it was range bound, fairly much range bound into the close. It did have a bit of a pop into the close. The broader market S&P was the same, so that the actual action intraday wasn't too much. It was fairly range bound in my book, and it's probably only held. We'll probably get that little spike into the close because the Hang Seng the Nasdaq was making new all-time highs, so that makes up quite a lot of the S&P and the Dow. So you can see the mini ramped up into the open. US opened a bit of a drop and then rally, and it didn't do a hell of a lot after that. The gains were already booked, so it wasn't really data driven. There was news about services data PMI was better than expected, but that came out at 10:30, and then some other data out at 12:30. It's got nothing to do with the rally. The rally was already well and truly entrenched by then, and it's whether or not we're going to continue that move today, and we're going to rally through this resistance, which I'm not sure we got that, which pretty much these highs in here, which we're going to jam up in those highs around 26,500. Is there another couple 100-point rally today, pushing up into the European Open or not? Now the ASX, that wasn't looking too crash hot. We had this little push up in the open, pull back, rally, and then later on we got that big sell off into the close. So whether that's just trying to consolidate above that 6,000 level, which we can see is previously broke, consolidate there, maybe we might have a bit of a spike lower and then rally into the close today. Who knows? But either way, that's confirmed lower high. We might look to just squeeze some of these buyers back out here, just near the open, bit of a push lower and then rally. Otherwise, there might be some longer term weakness into the ASX. We might just not believe what's happening in the US. We might not believe what's going on in Europe. There's too many problems out there. And we're kind of a tentative market either way. So that's ASX, DAX. In the UK, look at that, gapped up in the open. That was all downward traffic. So the intraday action was negative. It's just that it started from a high. It started from a big gap up, and the same with the FTSE. So once the market was open and it was ramped up through the Asian session, it didn't do too much. So if you're buying, you can imagine there's people that are bought on the open and they're underwater. Even though the market's up 200 points on, say, the DAX, up 200 points at the close, you're actually down from your entry, potentially on the open. So there would be a bunch of stocks that could easily get squeezed out tonight. If we go over to the currencies, we're onto the dollar first. The US dollar is the one that we got our eye on. There's some selling that came in yesterday, which we're mentioning there was potential selling to come in there if the market could roll over. And if it can continue, we're looking down to this support zone. So for the dollar, I'm looking for a continued move, some lower highs to hold back into this zone around 96.45.50, which would mean that there's probably further upside on equity markets. As long as the dollar's heading south, there's no safe haven buying into it, then equity markets, it's all risk on into the share markets. So we'll just see if that can play out. If we do pop up through here, this little minor inside level, which is around 96.82, thereabouts, and this is the dollar index, the futures. It could just be a flush. It doesn't mean that the trend is broken. The trend is broken once it gets up through here, that trend down. So that's holding the action down at the moment, not this level. Okay, so just be careful that you don't go, okay, it's all over. We pop through that level. It's just a flush, and then we go hold a lower high back into this support zone. All right, so just be wary that you're not getting caught out on the dollar, and that goes into you don't have to be trading the dollar, but you're watching that, and you start to buy, sell the Aussie when the Aussie turns around and then squeeze you back out again. So the Aussie is been charging up in this resistance zone around 60, 69.70 on the back of the US dollar weakness. Now, if US dollar weakness continues, we should expect that to continue up. Now, RBA is out at 230 today, so we may find, I wouldn't be surprised if we get a bit of a pullback on the Aussie, pure and simply just as some profit taking. These longs that are built up here, booking some gains. It's probably going to get choppy coming into the number, and I would expect something to be taken off the table. But in saying all that, we don't expect anything major. I don't think interest rates are expected to be kept on hold. I don't think there's going to be any change to their tone in the statement. So I don't think anything's going to be different. It's pretty much factored in. It's already cooked into the market. And if nothing really changes, there's no need to change direction for the Aussie, and it could just keep playing up as long as it's got the dollar weakness. The Aussie keeps playing up through that resistance zone, and we keep there's enough shorts built up through here that would be holding stops roughly above, and they'd just be begging for that market to fall over. Now, if it doesn't, they're going to get squeezed out, and we're going to get that push up into 70.50. Okay, so the Euros, much of the same action. We've got the dollar weakness is driving that Euro higher. We've got it's pushed up into this 113.45 zone. It did react lower off that, so it'd be interesting to see if we just do what I'm actually expecting on the Euro is really just to hold this inside level and to jam back up into that resistance zone. Now, that obviously it goes hand in hand with a drop in the US dollar. So really that US dollar is the key thing for these currency moves and the equity moves at the moment. Now, if the US dollar starts to ramp hard, then expect some selling into equities, some profit taking in the currencies to turn as well. Pound, not too really looking at that, to be honest, too much. Didn't have as a stronger buying session as the Euro and the Aussie. It seems a bit more tentative. It did grind higher, but then as soon as the US session opened and we got some buying into the US dollar, they got some selling pressure into it. Now, I just want to go over, lastly, gold. Gold, we've spoken about this quite a few times. Just watch for the flush and run. You can call it rinse and run. So rinse some of these buyers out and then turn around and pop. And it does it time and time again, rinse and run up here, rinse and run up here. That's a perfect example. It just has to clean out one side of the market, put them back on the sidelines, and then run back up. So if you were long here and you got squeezed out, you got stopped out, you'd be kicking yourself and you'd probably be chasing the market higher. And that's what the market tends to want to do time and time again, just to put people back on the sidelines, squeeze them out, and get that run into the close, which we got last night up to these highs. So it'd be interesting to see whether we can hold below these highs. We might just flush it out and then do the opposite, flush it out on the upside. All the bulls are expecting that. They chase it higher, and then we get the lower high coming to pressure all these longs that are built up through here, through the run up from 1770 or so, and it can turn around and squeeze them out. So I mean, I'm not a massive gold trader at the moment. I think it's a bit extended up here. I don't like things that are extended in previous highs. I'm expecting a flush more than anything else. I don't expect this just to continue pushing higher. Again, you've got the US dollar could move low, which could mean gold's going to pop up, but it's down into a key resistance zone. So if we do get a reaction high in the US dollar, just some profit taking, you're going to get a reaction lower. You would expect on gold. It's just whether equities start to fall in a hole or not, to whether this really gets sold or the US dollar really gets bought up. It's not acting as a safe haven. If you think this is safe haven buying, I don't think it is. I mean, in my opinion, it's just completely linked to the US dollar. Now, just quickly touching on the other two, crude was struggling to get anywhere. It did push above 40. Find out where I've got it. Here we go. Crude pushed above the 40, but it kept pushing into it. So it's struggling to get, hold gains well above 40 to really push on strong and continue on, which doesn't bode well for overall markets, but it is in an uptrend. I mean, it's still holding. It's quite a shallow uptrend, as in it's not, you can see this rally here was quite hard. So any rally was quite hard, whereas here it's a bit more contained. It just means there's more selling pressure into that. All right. If you don't get that hard rally, so anytime it spikes up, it's getting sold straight back into again. So again, it's not getting further away from that 40 40 resistance zone, or this zone through here. It has pushed through, reacted off, pushed through, reacted off, got back above, reacted back into it, reacted back into it here, then held a lower high. Are we going to do that? Get up to these highs, then plow straight back down and hold a lower high and get sold off? We'll just wait and see. And then lastly, copper. My comment this morning was someone fell asleep on the buy button. Basically, it opened and it didn't look back. That was quite strong action. I mean, it was all one-way traffic, barely any pullbacks, just buying all the way up. So that was well and truly getting ramped as well, along with the overall markets. It looks like it's a bit of a race to see how high they can get before it gets smashed. And that's my opinion, whether or not it is, but they're trying to harness to extend these gains as much as possible. So when there's potentially some damage comes into, it's not going to be to as low as what it's expected. Right, so excuse me, that's probably about all I wanted to cover. Like I said, these markets don't just keep going higher without a pullback. And the higher it goes, I'm getting more concerned it's going to be a pullback. I don't want to sound like a bear. The markets are going up at this stage, and it is, buying within the shares. I'm not seeing a massive, some massive amount of buying opportunities. A few ones that the buying opportunities are into extended markets. It's not so much you're buying on the lows. You are buying into something on the shares that are already performing. All right, they've had a bit of they might be just correcting, consolidating a higher low, and then you're looking to buy into that. So you're looking to buy into something that's already known, which means that if it's already known, they might run out of steam soon, and then that move down could be savage. So that's what my take on the ASX shares at the moment. So we'll just see how it all goes. Anyway, guys, that's about it. If you've got any questions, feel free to send us an email to support@tradesetup.com.au. Feel free to go through our website. I've got to update some of the bits and pieces on there, which is just some of the previous streams we've done. You'll see on the resources section. And there's also a button to subscribe to any mail outs we do. You get yourself on that mail out list, and then you'll see anything going through. If you do subscribe to YouTube, you get the same sort of stuff anyway. All right, so it'd be great if you can leave us a like. Thanks very much, and we'll be back in tomorrow. Cheers, guys.